We have Kunal Kothari joining us to discuss this. Uh, to discuss this. So, Kunal, firstly, coming to you on the fact that the positive commentary that has come in from China, do you expect any kind of an uptick that could happen in the prices? Because in the past also we were expecting some positive boost to come in when it comes to the real estate space and the manufacturing sector, but nothing meaningfully had come in from China. Post this announcement, are you expecting any kind of an uptick in the metal prices?
Yes, of course, on the international front, we have already seen a good uptick in the steel prices. So, on a month-on-month basis, we are looking at around 15% has already increased from the bottom, which we have seen in last month. And similarly, positive trend is continuing in India as well. So, in recent last 2 weeks, we have seen a good turnaround in the trend, and prices are has actually moved up by around 1,000 to 1,500 rupees per ton. So the stimulus which has been announced is in China. It is actually flowing very positively for the metal sector.
Price increase that has happened in China as well as in India. What is the differential here? Is Chinese still at a discount to Indian prices?
No, it is not right now. So over the last 6 months, we have seen the landed cost of from China. So it was around 5 to 10% discount to the Indian prices. But as recently we have seen the international prices have moved by around 15%. Now we are at discount to the landed cost of China. So henceforth, the problem in the entire sector was the excess export from the China front, but with this, what we believe is that now the trend should reverse on the export front, on the overall imports happening in India. So from the highs which has recently they made of around zero point 0.6 million ton, we believe that the India being importing on a large amount, it should decline going forward in the foreseeable future.
Differential here, if you could just quantify that.
Sorry.
What is the price differential here and what is the margin or the headroom that Indian steel producers have to increase prices here?
Yeah, so on the comparison basis, Indian prices are nearly 2,000 rupees lower compared to the landed cost of imports. So gradually in India as well, we will see uptick in the overall demand post monsoon season as the construction activities pick up. So with that, we believe that gradually Indian steel players will also increase the steel prices, which will be favorable in the overall results for the next 2 quarters.
Point taken. But overall, there's this expectation, reports doing round that the government can come up with some sort of restrictions to curb the imports of steel in the country. Now, given the kind of price differential you're talking about, and and you said how it's likely to, as it is, narrow a bit. Do you see the need for these, curbs to come in? And if yes, which are the companies that stand to benefit the most?
So earlier it was a need as the export was on a higher end. On a year on year, it is still at 50% higher. But as a trend is reversing right now, I don't see there will be a further requirement. So in a steel as a sector is a cyclical in nature. Whenever there is a lower demand in China, it tends to increase the exports. But with the stimulus support that the government is providing, we are expecting the demand should revive in China as well. That will limit the exports from China, and hence we are seeing it reflecting in the steel prices as well. So I don't think so. There will be additional measures apart from already the India is having the import duty and the minimum import price bar of around 480 $490 per ton. So that is I think feasible right now.
So that's the situation from China. But if you had to, make a pecking order in terms of your stock recommendations within the ferrous, non-ferrous space, what's your pecking order and what's the, top bet?
Yeah, so we like JSPL from the ferrous front, and from the non-ferrous, our topic is Vedanta Limited.
And thanks so much for making time and speaking with us today. Appreciate you joining us on the show. I think Somit does have a question that he wants to add in. So go ahead, Kunal, if you can still hear us. Somit is.
Well, yes, this question was actually on the aluminium side. Now, China's alumina export has been continuously rising. Do you expect the similar trend to continue? And do you expect a rise in alumina plus aluminium prices also globally?
No, so there's a different story in the aluminum front. Right now, we have seen the global inventory has actually doubled over the last 3 to 4 months. So I believe there will be some pressure on the aluminum prices. It will remain in the range bound to $2,400 to $2,600 for the near term. But however, companies in India like Hindalco and Vedanta tend to benefit because of the backward integration which is happening, commissioning of the new coal mines and everything that will bring down their overall cost and boost their margins in a more sustainable manner.
Okay, point taken. Thanks, Kunal, for making time and speaking with us today. Appreciate you joining us on the show.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 1,865 to rupees 1,960 per equity share of face value of rupees 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.